Hi everyone, welcome back to my channel. Today I want to talk about how we can use the dealer positioning dashboard on TradingView to make future predictions regarding how price will likely move based on the past performance when Greeks are positioned a certain way. Before we get started, I'll leave several referral codes for trading services I use in the description, including TradingView, Elite Trader Funding, and TradingView that will give us both discounts. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. With all that being said, let's get right into it. So I'm looking at the SPY options dashboard, and we can actually get to that on the left hand side if we choose options, and then we search SPY up here. And I predominantly trade ES, but I do use this dashboard to make decisions and prep for my trading. And as we've talked about in past videos, it's important that we don't look at net flow here because this will be largely skewed by positions used for hedging and things like that by large institutions. However, when we start getting into the dealer positioning side of things, that's where this dashboard becomes extremely useful. And I'll talk about things like the new spot gex and vanna gex in future videos, as well as dealer OI and things like that. But for now, I want to focus on this dashboard here, which shows us the dealer Greeks build up. It shows us how dealers are building up, how deltas have been built up from a dealer perspective, gamma, vanna, and charm. And what I mean by a dealer perspective is essentially the market maker perspective. So us as retail traders, we're typically called the consumer. We're the ones, when we buy or sell options, typically we're interacting with a market maker on the other end. There's 6 known large market makers out there. And this dashboard gives us a viewpoint of how they are positioned on SPY or whichever underlying asset that we're looking at, so we can get a better idea of how their hedging practices has caused SPY to move in the past. So up here we can choose deltas just to see the overall deltas. Now these are hedged immediately, and these are subject to change based on the secondary Greek. So we have gamma, vanna, charm. We can select them all at once, although that's not necessarily wise to do because it doesn't lead to the best correlations, which I'll talk about shortly. But also, and so if we don't want to look at dealer side positioning, if we want to look at customer side positioning, which could essentially mean customers being retail traders, or more often than not, it's speculative traders like big funds that are buying positions, and typically they'll use SPY to hedge their other positions. So if they have a large portfolio they're managing, they'll do something like buy puts to hedge that portfolio, and they'll buy those on tickers like SPY because the interaction there will have a less of an impact on the underlying move. So if you want to see how the deltas are structured for customers, you can choose net put deltas to see how net puts are positioned. You can see here that the net puts is actually had a large spike during this rundown, which is what we would expect, and then it's sort of leveled off. But at the same time, we have to keep in mind that this will also heavily be used for hedging. It's not just speculative trader positions. And then we can also see net call deltas, and it's interesting to look at this stuff because you're seeing these metrics for the market as a whole. So we can look at, okay, all the dealer side deltas, all the positive deltas that dealers are hedging against, and then we can see, if we look at gamma, we can see they, for quite some time now, they've had a large amount of negative gamma, which does not mean a downward move. I talked about it in some other videos, more recently at TLDR of gamma exposure. It just means that there's additional volatility, which is what we've been seeing in the markets a lot lately. And then of course we can also look at vanna. We can see vanna is largely negative currently, and then we can see charm is largely positive for the time being, and I'll cover those in future videos. And then we'll probably have to do one on tying it all together because vanna and gamma are very important, and they're most useful when you combine them together. And then so what we want to do is we want to try to get an idea of how price will move in the future based off all the data that we have historically. So right now, I'm just going to leave this on deltas, and if we scroll down, these 3 dashboards go hand in hand with what we're looking at up here. And so without even needing to fully understand how gamma exposure and vanna exposure and delta hedging and all that stuff plays a part, you can still get a really good idea of how it will correlate with future market moves based on how it worked in the past. And one thing I should note too is that when we choose this Greek correlation dashboard here, by default it's going to be set to 1 day. So we want to look at future moves. Now this dashboard, we'll set it to 1 day here, and we'll see that this dashboard shows us the type of correlation we have. So how well this is correlating. If the better the correlation, the more reliable this data is. Now, for financial data, typically when you're looking at statistical correlations, you want to see we're talking in absolute values. So even if you see negative 0.088, you can look at that as the same as you would as a positive 0.088. And typically you want to see this as high as 0.4 or negative 0.4. Again, we're talking absolutes, so if you see negative, just think of it as a positive number for what I'm referencing here to get a really strong correlation. However, with financial data, that's not necessarily the case. Having a 0.2 is actually incredibly strong, a very good correlation when it comes to financial data. If you get above 0.2, that means these correlations are very strong and can be relied upon to make future predictions on how price will move. So we can see just by selecting delta and having it for 1 day, which is the default, is a negative 0.088 correlation, which isn't all that great. So the first thing we want to do is we want to look at the various Greeks and click on them to see which is going to be more correlated with price historically. And so but the other adjustment we want to make is we want to adjust by time. So the more future change you give this, so if you say 2 days, 3 days, I like to go to 5 days, you'll see that you'll instantly get a better correlation. So you'll instantly get more reliable metrics here. So right here, just by setting it 5 days and looking purely at the delta hedging, we'll see that we have a correlation of negative 0.205. Again, in terms of absolute values, that is negative 0.2, above negative 0.2, which is a strong correlation. So we can run with this. And I encourage you to go through and click these to add in gamma, add in Vanna, to see how well it all correlates. Try leaving off deltas to see what kind of correlations you get. And again, the closer, and you can see here, gamma, Vanna, charm, we have 0.1, which isn't terrible. I mean, it's not great. It can certainly be used to gain some insight. And this is all the secondary Greeks that we're concerned with put together. But I encourage you to look at these Greeks and see what, with the time frame that you're selecting, the predictive change that you want to find, to see how well they correlate together. And so for the purposes of this video, I'm just going to stick with deltas, and I'm going to stick with a 5-day future change, because a negative 0.2 correlation is indeed a strong correlation. So now we can see, okay, what can we expect SPY to do in the next 5 days based on how deltas look in this market right now. And so right here we have this scatter plot chart, and we can see that the orange dot is where we're at. And so this shows us that if deltas shift more positive or if deltas shift more negative, historically, how has this impacted future price percent changes? So this means that where we're at right now, we can see percent changes, and this gets shown a lot more easier on the dashboards to the right, but we can see just by kind of hovering over this, we can see as high as a 2.2% change, and then we have actually more negative correlations here, so as much as a negative 5% change in SPY over the next 5 days. And so we can automatically see just by looking at these deltas, this seems to be typically correlated in the past, more correlated with bearish moves, right? We get much bigger bearish moves when deltas have been structured this way than we do positive moves. Now, we can see this more clearly in the price distribution chart. So we can see expected future distribution of price based on delta in the chart above, because that's what we selected. Again, this will change based on what we choose here, but it's very important to make sure that you have a good correlation as close to or above 0.2 or negative 0.2. So if we see here, if we leave this as deltas, we can see that the probability of us getting anywhere from a 0 to negative 1.2% move over the course of the next 5 days is around 27%, which is actually, compared to anything else on this chart, is a very strong probability. Now, if we're looking at bearish moves, I mean, we can see the other probabilities to move negative 1.2 to negative 2.4, negative 2.4 to negative 0.36. And you can see each one comes with their own set of probabilities. So we basically have almost an equal chance, or we do have an equal chance of 12% chance, essentially, of moving anywhere from 1.2% to 4.9% for each one of these. Each one is a negative 1.2% decrease here. So, and then for a positive move, we actually have much less of a chance. So for a positive move, that's from 0 to 1.2%. We have about a 9% chance of that occurring. We can see that increases a little bit to 12% when we start getting to 1.2 to 2.4 over the next 5 days, and then it really just falls off for any moves greater than that. So there's definitely, we seem to be leaning more bearish based on the way deltas are currently structured in this market. Now, when we're talking about volatility, again, since if you're an intraday trader, if you're trying to day trade options or futures markets, volatility is your friend. It just means we get wider swings back and forth. And so don't be fooled by the date here. This actually did fool me. Even though this says September 2nd, this is basically saying, because we selected 5 days, this is saying 5 days in the future from September 2nd. Here is the price swing that we're likely going to get. So we can see on the lower end, we're looking at about a 1.4% move. And then, of course, and again, this is a price change overall, so this could be negative or positive, which gets broken down better by this price distribution chart to see exact probabilities of that occurring. We can see the average price change is going to be roughly 2.4%. So if we hover over that, you can see that this 2.4% chance is pretty much equal for both either negative or positive there. And then on the higher end of the spectrum, we might see as high as a 3.5% change over the course of the next 5 days. So again, this does seem to have more of a bearish skew, which is certainly in line with what we've been seeing in the markets. And if we go up here to SPY and we just look at the price percent change, so we want to start on the close of September 2nd here. So this was a red candle, and let me just zoom in a little bit here so we can see this better. And let me turn off some of this volume profile stuff to get it out of the way. Now, if we see here, so the probability of a negative 1.2% chance is actually a pretty small move, right? So we're not looking at anything major there in terms of SPY. So really, in that case, and if we're looking at it being positive, I mean, it essentially means we'd be pinned between a tight range if that were to happen over the course of the next 5 days. So one thing I really like to do is pair that with macroeconomic events and see, okay, is there anything, if that's the case, if we might be pinned between this range, if we have the highest probability of being pinned between 1.2% positive or 1.2% negative, what events coming up could the market be waiting for? Meaning, what events is big money waiting for in order to start driving the market one way or the other? And so looking at the calendar, I mean, we see Tuesday we have PMI, which has been notable for market moves. Also, we have Fed chair speaking on Wednesday. So this could be significant. This could lead to some more hawkish outlooks, or maybe even some dovish outlooks, but this could certainly lead to a big move. But then on September 8th, we also have jobless claims, and then Jerome Powell speaking. And so this could mean that we're actually going to be waiting until we might have sort of a choppy week. It's a holiday week, so the markets were closed. Well, not the equities markets. The futures markets were open for a half day, but the normal equity markets were not. The New York Stock Exchange and everything was closed. So we already lose that day in terms of any major moves on SPY. So in terms of Thursday, September 8th, it could mean that we're just essentially going to chop around until after we see this data released here. And that might be some of the reasoning behind why we're seeing delta structured this way. So it's just something to consider and something to plan ahead with. Now, of course, there is always the possibility, and this dashboard is something that we should be checking either every night or every morning, just to get an idea of the best correlations based on the dealer Greeks that we have available to us and the historical data that we have available to us, and then we can start getting an idea of how we can expect price to move and what those probabilities would be. So it's sort of looking like we're going to chop around until we get some sort of major event. However, And in the case that we don't, in the case that something sits this market off, we can see if we go to more of a 3.4 or 3.5%, 3.4%, we could get a much better move. Now, the bear case could see us coming down to 389 roughly, or even excuse me, 388, depending on the type of move, which would be pretty significant because we have a 390 is going to be a major level below us, and then 400 is going to be a major level above us. And that sort of goes with the case that depending on where we open tomorrow, if we open around 395, there is a good chance that we're just going to chop around between 390 and 400 before some sort of event sets us off. So when you think about this dealer dashboard, and you're looking at the price distributions and the price movements that it's expecting based on the best correlations, and you pair that with market news and economic events that are coming up, it's pretty astonishing how this typically has been pretty accurate in the time that I've used it, but also it always does seem to correlate with some sort of event, because we know when we have these big macroeconomic events, oftentimes big money will just sort of stay flat until they have more data. And then at that point, once they have the data, if it was something unexpected, we'll see the market dump. If it was something expected, even if it's bad news, it's not if it's bad news or it's good news. It's just if it was expected move or news or unexpected news, then we'll see the market move one way or another. But we can go in here every night or every morning and check to see if there's been any changes to these Greeks and how this might shape the upcoming moves over the course of the next 5 days. And so anyway, that's how I tend to use this dashboard. I do find it very useful just to get an idea of what we're looking at, what type of week it will be. And you know, sometimes it's sort of obvious if you've been a trader for any number of years. You already know that the likelihood when we're sitting in this position at 395, that if we're opening around 395, the likelihood of breaking and holding above 400 or breaking below 390, in order to do so, that's going to require some sort of significant reason in the market, because those are both significant levels, which you can also gather from looking at the daily chart on SPY as well. But hopefully you find that helpful. And of course, if you have any questions, definitely let me know, and I appreciate you watching.